Good morning, ladies and gentlemen. Good morning. Hope you're all doing well. So, happy Friday as well. We've reached the end of the election week. Amazingly, and amazingly, I would say unscathed. We've actually done not too bad in terms of our trading performance this week. The fund has provided, I would say, excellent trading opportunities in the stock markets this week. We haven't taken too many trades, so our trading volume has reduced significantly over the previous weeks. We were averaging out 20, 30 trades in a week. So we were really, really pushing through the volume in those weeks. But then this week we've only taken... I do actually have it here somewhere. Bear with. Yeah, so this week we've actually done 1, 2, 3, 4, 5. So we've actually only done six completed trades so far. We've got a couple that are still running, but we've only actually got 6 trades on the book so far. And out of those 6 trades, we've got a couple of losers, so 0.5% down. And all the others, of course, are all up over 0.5%. So it's not been too bad. I think the fund at the moment is currently sitting at about 1.75% up for the week, which isn't too bad at all. It's not as big as we have seen, but again, not going to turn my nose up at it, considering all the fundamentals and the major news and stuff that's been happening. So I think all in all, on reflection, the week has been pretty good. I think we've managed to protect ourselves quite nicely. We've been, I think we've managed our risk exposure very well as well. And even though it's been slow, it's been consistent. Morning, Ian. Could you, quick sound check, please, mate, just to make sure I'm coming through loud and clear. I mean, you haven't said I'm not, so I'm assuming I'm coming through all right. Yeah, I can see you typing. That's all. that's good enough. Excellent. Thanks, man. That's good stuff. Thank you. So pretty decent week all round. Consistent, slower, but consistent. And that's kind of what we were aiming for. That's what I was explaining on Monday. Really wanted to let things kind of settle down, get through the election, get through the FOMC, and then we can hit it full steam ahead on Monday. But in doing so, we're still at 1.75%, like I said, so that's pretty good. And we've still got a couple of runners on the go. So Cat Swiss here, for example, is underway. Really unfortunate about the Euro Oz, to be honest, guys. Really, really quite unfortunate. We had 3 individual attempts at the TP, 1, 2, and 3, and then it went almost to break even. We failed to break and close above this area of liquidity, so we're still trading well under that at the moment. But yeah, almost to break even straight from hitting a TP for a 1 to 2.42, which would have been nice to have land in the bag before the weekend. Anything can happen, of course, but it doesn't seem too likely. We've been grinding it out down here for a while now. So, yeah, I'll have to wait and see about that one. And then, of course, we've got the Euro NZD. The Euro NZD didn't come as close as the Euro Oz did to its TP, but it still got pretty damn close. And then it went from pretty damn close to stop loss in the same move the Euro Oz had. So that was a real shame as well. And the pound Swiss is removed. So if you do still have that pending order in, and for those of you who will be catching up on this stream in a couple of hours' time, if it's not triggered and you still have the pending order in, remove. So we don't want anything more triggering today and then being stuck in it over the weekend. Yesterday, we took a hit in our UK Brent, position number 1 of 2. So we took the shorts triggered around here. And we got taken out of it on this candlestick, the big spike up. So that was a little bit of a shame, as we did get to about 65% of the trade towards TP, I mean. We came all the way up, actually just dipped its toes in liquidity up there, and then all the way back down again. So the zones definitely have the right, they're definitely placed right. That's what, goes without saying there. That's the proof, but... yeah, shame that we didn't get the trade idea working out for us in the end. Obviously, we didn't get our opportunity in corn. We did have a little bit of a sell-off, but that one missed our entry by a small margin. Gold is gold. We've now completed the break, close, and retest of this area. Could potentially look at longs, except for the fact that we're on a Friday, so we don't want to be taking anything too drastic in gold now because of the weekend. So we will be pushing that back until next week. But it's definitely a next week idea that I think could prove quite nicely for us. So we'll be keeping tabs on that one. Yesterday in the stocks, it was pretty good. Did not get the majority of the move. So, for example, this one in the NAS 100 was a break close and a retest opportunity. So I decided to go for not this break close retest, but actually this break close retest of this area. And that was my 1 to 2 in that part of the leg there. As it happens, we actually had 1, 2, 3, and 4 1 to 2 risk reward ratio trade ideas. So yesterday could have been even better than it was, because because of the length of the move that we had to the upside. I mean, the NAS 100 was very, very impressive yesterday. You know, really, really impressive. I mean, look at the daily. It really goes to show just how strong these stocks are from this week's fundamentals. You know, huge structural breakout. You know, we're not even kind of bothering with this little point of liquidity anymore. We're going for the big one over here now, right? So we're utilizing this area, and look at that for the breakout. I mean, it's enormous. It's absolutely huge. So I would definitely be next week looking at a possibly more bearish week in the stocks. Contractions. I don't think we're gonna be breaking back underneath liquidity, but I do think the markets are going to be in retest mode, which is going to yield some decent trading opportunities for us next week also. Looking at the Dow Jones, look at that, guys. That Dow Jones candle is it's insane, isn't it? Really, absolutely mad. Yesterday's candlestick saw nothing in the Dow Jones, but on the 1 minute time frame, we did manage to capture a couple of trades. We actually got 3 individual trades in the end, which was quite nice. And we were trading in between here. So had one trade, which was there for a loss. Second attempt, which was a win. And then we traded a short back down, which was a win as well. Now, just similar to the NAS 100, if you were really committed yesterday, you didn't just have the 1 and 2 here. You would have had a 3 and a 4, a loss, and a 5 there. So you would have had maybe 5 wins, 2 losses in that one. So again, just like the NAS 100, it wasn't anywhere near as good as the NAS 100 in terms of its bullish momentum, right? I mean, the Dow Jones, honestly, yesterday it closed lower, so it didn't really achieve anything too drastic. But because of the nature of where our trading margins were, we had access to a lot of trading opportunity there, which was pretty decent to see. Same with the same with the S&P 500, but this is more sort of, I would say, leaning towards the essence of the NAS 100. The S&P saw a lot of growth yesterday. We had the initial sort of leg up here, which is in the afternoon. Then we had the second, had a nice price action pullback, had a third, and then it cruised along overnight for the Asia session, and this is where we're trading at the moment. But we look at the S&P's daily candlestick as well, very, very similar to the NAS 100. I mean, it's looking really strong, really incredibly strong at the moment. So lots of big things have happened this week, definitely, not just fundamentally, but markets as well. Lots of all new all-time highs have been achieved. We've had some pretty decent volatility in other things as well. Euro dollar, for example, obviously as a direct result of the fundamentals this week, had a big sell-off on election day, and then we had the price corrective yesterday, and now it looks like we're getting a kind of sort of trend continuation, I would suppose, to the downside there. I haven't really seen too much out of the commodities, to be honest. They haven't had as much of a move as I thought they possibly would have. Gold itself on election day really did move, but since then hasn't really done anything. It's kind of fizzled out. The rest of the markets, though, commodity markets, I mean, they've done nothing this week. It's been really, really slow. So not too reactionary. I mean, as I said at the beginning of the week when I was doing my election forecasting and my sort of election analysis, is the Democratic Party, if they won, would have been much better for some of the more, I would say, niche renewable markets, renewable energies and stuff. Whereas I thought the Republicans would have been better for fossil fuels. So to see that we haven't really had too much go on as a result is, I think, surprising. But there's other geopolitical factors at play here, as we all know, tensions and stuff like that, and wars as well. So have to take all that into consideration. But yeah, so I mean, sure, it's a bit of a mixed bag, isn't it? I think, as I said, done pretty well. Things have been a bit. I think they've been a little bit slower as a result of everything going on. Protected ourselves, but it's been good all the same. So we will go through things from a daily perspective. I'll have a quick scan, see if there's anything lining up for next week. There's not going to be any further trading opportunities today, apart from the US markets. So we will be trading the US this afternoon, and I will be back posting out full technical analysis for the US markets this afternoon. So stay tuned for that. In terms of the dailies, we've had some breaks of structure around the place and some retests underway. So I think these are going to be proving to be quite good for our baskets next week. There's nothing at the moment on the Aussie CAD, but this Aussie Yen is looking really nice. Now we've had a good break of structure, as we can see. We had the bump up, and now we've got the retest, which is coming back down, which is today's candle, essentially. So that's what we're looking like there. Nice break close retest next week. We could certainly be looking at this one continuing to at least around 103, which would be a really decent trading opportunity for next week. The view of the opposite side is that the Aussie Yen is going to be trading back down to the bottom of the previously traded range, and that's at around 100, maybe just a bit below. So a couple of decent opportunities there for Monday, I would say, and heading into next week. Aussie NZD is a potential double top on the daily time frame, so you can see that there. We've got a pretty decent trading margin. The range on the Aussie NZD has been quite large, as you can see here on the daily. It's pretty big. So if we have a bit of a bearish day today, or we sort of stick around this area where we're at the moment, we're probably going to get a pretty decent trading opportunity back down to 110 as well on that one. Aussie dollar is another one for a BCR. So as we can see here, daily time frame, nice structural breakout, really nice retest. If this stalls here, as it looks like it is doing, I mean, this has come all the way down to here and is now contracted all the way back up. So if we stall here and we close anywhere around sort of 66.60, then next week we could be looking at a move up to this area in here, which is also really nice at 67. So that would be a really nice intraday trading opportunity for us next week as well. No point looking at the CAD Swiss at the moment. Still in that one. Still looking like a range continuation. Nothing to be said at the moment on the CAD Yen. Not really a huge fan. Still upward trajectory, but hasn't done anything too significant to warrant there being a fixed bias at this moment in time. Euro Oz is just bloody unfortunate. I mean, let's face it. We had a really nice move to the downside. We missed this used level of liquidity by a bloody hair's breadth, and is now bounced back. So we're just going to wait to see really about what that one does. Next week, though, of course, looking ahead, it would make sense if we get the move down into here to go long the Euro Oz back up to around 163.20, which would make for a really nice trading opportunity. Euro against the Japanese Yen. So this one, again, really nice break close. Retest currently underway. It's almost there. We could definitely look at going long the Euro Yen from a rejection of this area, or short the Euro Yen once we break the structure under the 163.40 area. Euro NZD, rejection from the lows to go long back up to the highs. Pound against the Oz, not really interested. Pound against the CAD, no, not really interested. Pound against the Swiss, I still like this short. So the pending order that we removed was the range trade in between here. I still like that trade. There's no point having it open and leaving it in the market today. But if we look at the fresh setup for next week, I probably will be in a stage of re-adding the same pending order. So we'll have to keep, we'll have to stay tuned for that. Pound against the yen, not really anything there for me at the moment. Pound against the dollar, equally not really liking these pound pairs at the moment, guys. It's just looking way too inconsistent. Higher highs, lower lows, sporadic candlesticks, big institutional moves followed up with tiny little dojis and hammer candles and stuff. It's all over the damn place. What I really want to see with this one to get that confidence back in it is a breakout above the 131 area to go long, then back up to around 131.67 and then even up high to 132.60. Or the alternative view is a possible, this one I'm not sure about only because of where we are currently. If we stay above this area until next week, we could look at taking that down to there and trading that margin there as well, because that's not too bad. But that one will, we'll have to revisit that one on Monday. NZD CAD, no thank you. NZD Swiss. Okay, NZD Swiss, again, not too bad. Nice rejection from the highs there. It's already kind of gone into its move now, so potentially looking for a push into liquidity down at around 52. Get the reversal from there, and then we can ride the rally back up to 52.60 for a 60 pip trade. That's a possibility. Another possibility, we break up structure above here at 52.75 and ride the rally back up to 53.13. So a couple of ideas there in the NZD Swiss that we can be considering next week. Not a huge fan of the NZD JPY, to be honest. NZD USD. Yeah, not good enough. Not good enough. I want to push into liquidity. There's no way I like buying an asset like this when it hasn't achieved a cash-rich area. We've got a lot of money in this area here. We've got hardly any money in this area in here. Okay, so a lot of this was election and FOMC stuff. So we have to discount that. So in order for me to go long the NZD USD, I need to see the push into 58.50 to 59. And then I'll have that confidence because I know that the institutional money is with us and onside. USD CAD. A structural breakpoint in there. Also could be used for a bearish level of liquidity to take a trade to if the market goes back down, goes back up to the previous highs. So we could be looking here like an area consolidation, a distribution phase for the asset value before it gets ready to take off again. If that's the case, then there might be a couple of trading opportunities in there, so we can look at that one next week as well. I don't like the USD yen at the moment. It's way too high risk. Too many geopolitical situations going on. Yeah, it just doesn't. I don't know. I mean, possibly. If I had a gun to my head and I had to have a bias, then obviously the trading opportunities between 153.60 and 152.13 are going to be a choice, or the breaker structure trade from 151 down to 149.50. That's also going to be a trade, but it's not in the limelight. So, I mean, covering the entire basket of FX assets there, I mean, there is a lot going on. It really feels like this week has been a setup week, doesn't it? It's been nice, almost. Not, if we set aside the fundamentals, it's actually been nice kind of taking a bit of a step back and just letting the markets do their thing. Because now we're in a position where hopefully we'll get back to the charts on Monday and we will have a ton of trading opportunities on the books again. So there's a lot of really valuable stuff going on for us in the markets. Nothing that we need to be worrying about right now, so we can go away for the weekend, have a bit of a rest, a bit of a break, and then get back ready to crush it on Monday. That's my attitude. to the markets at the moment. So I'm not going to bother reviewing the US stocks this morning on the session, because there's just no point. I will be trading in real time this afternoon in the US markets. I will send across my entire breakdown, everything that I'm expecting, for you guys, so that you can use that information. And and we'll go from there. But I guess, to be honest, that's probably about it. Short and sweet this morning, guys. Short and sweet. Like I said, this afternoon, stay tuned for the US markets. We'll be trading it. If I don't speak to you again, if you got plans this afternoon or whatever, I wish you a wonderful weekend. Lovely time with your friends and your family. It's been a pleasure as always, guys. Good job this week. And I look forward to catching up with you later on down the line. So take care, guys. Have a great day, and I'll see you then. Thanks a lot. Bye-bye.